Okay, today is 3:52 p.m., Wednesday, and we have a disclosure here. What we're looking at is the A scalper 1 minute, A scalper 150 ticks, B scalper 1 minute, and a B scalper 150 ticks. What I would like to show today that when we are going between two contracts, like the 30-year Treasury bond, you can see it immediately, especially on the 1 minute, how thin those lines are. Technically, you still can trade the 30-year Treasury bond until the end of this week, and then you can start the new contract on Monday, technically. But the problem is when the CL, the changing, or the 30-year Treasury bond changing, or very soon we will be changing from 9.17 on the ES to the 12.17 on the last quarter. A lot of traders, they see where is the higher volume, and then they switch, and then they continue trading. In my opinion, that when the market is changing from one contract to another, when the volume is split in half, the best option is to stay out of trouble. Whether it's a CL 30-year Treasury bond, is completely stay out of trouble and stay away from that market. If you are, let's say you're looking at the 30-year Treasury bond today, have a higher volume, that's very fine, fair enough. But for whether you are a manual trader or an automated trader, as you see, I didn't turn on the new contract today, but as you see, the 30-year Treasury bond did not really perform that well, and actually we have a losses on the A scalper 150, and you can see it's a very flat market on the 1 minute, pretty much not much going on. It did a little bit better on the B scalper, but the B scalper, it is built for a little volatility in the market, so it can take it better than the A scalper, and also on the 150 ticks. So the problem is a lot of new traders are using a Renko bar, which that also doesn't matter which Renko bar, but the Renko bar does not reveal the true movement or the true price action of that market, whether it's a 30-year Treasury bond or a CL or an ES in that matter. But for the ones that are experienced enough, they know better. You cannot deal with that market if you do not have on the side the 1 minute chart and the 3 minute chart and the 15 minutes chart, and whatever makes you happy, whether your entries are coming from the range, 3 range, 4 range, 4, 5 range, whatever, or every trader has his own number with the ticks chart. But if you do not have the 1 minute, 3 minutes, and the 15 minutes chart to identify the trend, then you are practically in trouble, and it can cause a lot of problems. So being on an auto trade or a manual trade, if you're not experienced enough to deal with the market and you don't like to be in trouble, then your best option to avoid that market, whether it's an auto trading or a manual trading, because when the volume is split, there is a lot of games in there, and we don't want to go in details on a short video to that. But this is my opinion. Everyone is entitled with their opinion, but for the safe traders, I strongly advise you, I stay away from it, and I don't see why. If you are a little bit concerned about your money, then maybe it is time to sit on the side till next week when the volume is in full, and then you can resume with your auto trade or your manual trade. On the rest of the market today is pretty much straightforward. But if we notice again, I want to highlight something about the NASDAQ today. The NASDAQ, we can see on the 150 ticks, the NASDAQ took a lot of beat today. And this is where a lot of traders, they don't pay attention to, that everything is in the green except the NASDAQ on the 150 ticks. Then if we look at the NASDAQ here, there is 450, but the reality is earlier today it was all in red, guys. It was in red, the NASDAQ on a B scalper 1 minute. The same story if we are looking on the NASDAQ on an A scalper 150 ticks, it was in red all day long, red and green, green and red. If we are looking on the NASDAQ on the A scalper 1 minute, also in red. Even on the swing trading today, the A scalper swing trading, the NASDAQ was in red. So let's just analyze what's going on today. If the NASDAQ on an A scalper 1 minute didn't make it, the NASDAQ on the 150 ticks did not make it, a little bit on the B scalper 1 minute, and then took a nose down also on the B scalper 150 ticks. So for the guys who are new traders, you said, what's wrong with the auto trade? As you see here, there is nothing wrong with the auto trade, but the NASDAQ is not, the way it moves, that NASDAQ today, was not helping on any matter, whether you are swing trading, where you are taking reverse trading, or based on a pullback re-entry, they all fell. And that is not unusual for any market. Any market sometimes is refusing to give anything. So it's not always whatever auto trade you have, whether it's from us or from somebody else. You should not, when you see a red, you say, okay, what's wrong with my auto trade? Give your auto trade a break, because this is market, this is movement. We are trying to predict the future, and sometimes we miscalculate predicting. And the key is right there. The problem is every trader will have a brutal day, will have a brutal month, or a bad year. This is not unusual. But the thing is, the management, again, this is the third video this week. I'm trying to pinpoint the management, because technically, if you have a $5,000 account, you can trade the CL. Technically, you can trade the ES, also squeeze the ES with it. But here is the problem. Any trader, any company, they have a bad day. So when you are on a 3,000 or 5,000 and you don't play it safe, any miscalculation on your account and you lose 5–10% on your total amount, that it is bring a lot of damage to your account, and that it is like penetrate the skin of that trader. So the trader gets a little bit upset about it, and then the second day he is desperately trying to get back into the game, trying to get his money back, and that means it's all over for that trader. Is exactly like a wounded soldier bleeding, and he cannot stop it. So the thing is, also I would like to advise that when you see a transaction between the older contract and the newer contract, when we have this rollover, if you are a safe guy, don't think you're gonna pull it. Stay away from the trouble, and try not over trading. Like if you have a $3,000 or a $5,000, try to take 1 or 2 trades a day and limit your losses. As an example, you say, I want to trade the NASDAQ today, and I'm only taking 3 trades. So we know we are calculating, we are losing, let's say, we are limiting ourselves on 3 trades, let's say on the NASDAQ with a 10-tick stop loss. Every trade is $50, so I'm limiting my day today on a 3 trades with a losses of $150 on a 3 days, if that I didn't make any trade. But then we are not putting the account and a great damage. And guys, don't say you can pull it. Nobody can pull it in this business. If you don't respect it, it can bite you back immediately. And when you make a mistake, you pay for your mistake right on the spot. So every mistake we make in this business, you pay the price immediately. It is a serious business, and if you don't respect it, you don't get respect back. So please, guys, again, I will try also to cover some of the basic and try to be a little bit more realistic with the trading and management before any kind of trading, whether you are a manual trader or an automated trader. So tomorrow we will start the 30-year Treasury bond, the newer contract, but stay away till next week if you are a bond trader, and stay away from the trouble. This is your best offer you can do, and then the same thing you do on the CL. Folks, that's all what we have for today. I thank you very much. God bless you all, and please be careful with your trading. See you.